Hello, everyone. Thank you for joining my small presentation. I'm Wael Makarim, Financial Market Strategist Lead for Exness. I know it's a long title, but this is what I do. I hope you guys enjoying what you're seeing. We're not here to promise you any returns. We're not here to tell you you're going to make $1 million. But I'm here to do a bit of a classical asset class roundup. And I want to make it more engaging, so I want to understand from you what do you trade mostly, and we're going to cover it. We don't have much time, apparently, because they were late on sessions, but we have almost 15 minutes. So first of all, who trades FX? Who trades gold? Who trades oil? Some people, they don't trade anything? Not at all? You're not traders, newbies? Stocks, who does stocks? Stocks, stock indices, Dow Jones, Nasdaq, S&P. So very rare. Cool. Then we're going to start with FX. Then we're going to go to gold, oil, and then we're going to end with stock indices. So what I decided to do today is just to show you some charts, year to date. So where we started the year, where we are now, and do some explanation on the drivers and what are the things to look for towards the end of the year. So these are the majors. These are interest rates. So everyone that's been in the space, especially recently, you need to keep an eye on interest rates, inflation figures. When is the Fed going to cut interest rates? When is the Fed going to hike interest rates? So all this is very important. And if you don't know that and you're trading FX, don't do it. Because this is one of the most important things to keep an eye on. Yes, a lot of people would say technical analysis does all the job. But also, for me, I've been trading for 14 years, and I would tell you, do understand fundamentals in order to have better returns on the market, or at least to have better understanding on where the market could be going. So these are the interest rates. The Fed has been keeping the interest rates. Last time the Fed changed interest rates was on the 26th of July. For the European Central Bank, it was on September 14. They raised interest rates by 25 basis points. For Bank of England, they raised interest rates by 25 basis points on August 3rd. Swiss National Bank, they were the first among major central banks to cut interest rates. I believe most of you, they don't do Swissy because usually Swissy is less volatile than others. You all like pound, yen, whatever, everything that moves, though Swiss franc pairs could be good nominees for you. Reserve Bank of Australia, they raised interest rates by 25 basis points, and they still remain the most hawkish across all central banks that you're seeing. In their latest meeting, they were poised a little to raise interest rates or not, so the market is expecting maybe in August we have a surprise. Bank of Canada, they raised interest rates in July. They're close to cutting. We're at 5%. Reserve Bank of New Zealand, 5.5%. And Bank of Japan, they recently raised interest rates by 20 basis points. They were on the negative for a long time, and now they're trying to shift. But would the shift help? We're seeing the dollar-yen moving a lot. I'm not going to give you more insights. We're going to speak about that in a few. So these are interest rates. Why, as a trader, this matters to me? Because this is one of the main things that you need to know when trading FX. Because if I want to hold a currency, if I want to do certain speculations, there is something called interest rate differentials that I have to take care of and look at. When the interest rate differential is wide, this means that a currency against the other could do a directional move. And this is what we've seen with yen pairs. If you look at the dollar-yen, 2 years back, we were at 115. Now we are at 155. If you look at the pound-yen, we were at around 150. Now we are around 200. And the likes. So all this because of the divergence in monetary policy between the Federal Reserve and, for example, Bank of Japan, between the ECB and Bank of Japan, and the likes. I know this could be boring for people who just trade RSI or moving average or I don't know what, but trust me, if you really want to understand how markets work, you really need to know this. Meeting dates. So everyone is speculating when the Fed could cut interest rates. So we started the year, the dollar was weak because the market was expecting the Fed to cut interest rates at every meeting starting March. So if you look at this, it was completely different. Now we're seeing only June meeting, July, and onwards. So if we moved from a place where everyone was convinced that inflation is going down, that the Fed will cut interest rates, so the dollar will weaken. The Fed would be the first, then the ECB would follow, then Bank of England, etc., etc. Now we are at a place where the market expects the Fed to cut only 2 times this year, one in September. I don't know why this is not working, but okay. So I'll do it here. So the market is expecting the Fed to cut in September. The probability for that is 49%. And another one in December, probability is at 36%. And another one in March, probability of 30%. So where we see a blue block, it means where the market is expecting the Fed to cut interest rates. So moving from 6 to 7 interest rate cut expectations to only 2 made a difference for the dollar. That's why we've seen the dollar strengthening across all major currencies since the beginning of the year. Now we're taking a bit of a loop because the market at the time dropped all expectations for interest cut this year. Now we are expecting 2. So we are on a two-sided things. We started at the left side with the market expecting 6 to 7. We moved to no interest rate cuts. Now we are at 2. So if we put this equilibrium, you know where the market could be standing later on. It is very important if you trade the euro against the dollar to see what the European Central Bank would do on interest rates and what the Federal Reserve would do on interest rates. Similarly, if you trade dollar yen, you have to see what the Bank of Japan is doing and the Fed is doing. If Bank of Japan will have a different policy than the Fed, there's a divergence, then you could see a directional move. If they are doing the same thing, then you don't expect a directional move, but rather sideways and consolidation. So if you are doing even technical analysis without going back to fundamentals, at least knowing that there are no divergences, it would help you to pick a reversion to the mean concept rather than a trend following concept. This is interest rates expectation for the Federal Reserve. So now we stay around 5.35, 37, so between 5.25 to 5.5. So the market expects the Fed funds rate to be in October at around 4.75. So this means around 3 interest rate cuts or even 4 interest rate cuts towards October. This is the dollar against the majors. Who could tell? So if it's euro dollar, I flipped it to dollar euro, dollar pound, whatever. So it's all dollar as base. So what was the weakest currency across the majors against the dollar this year? Any idea? What currency lost 9.6% against the dollar since the beginning of the year? Come on, you're all FX traders. What was the currency that lost, major currency that lost more than 9% against the dollar since the beginning of the year? JPY, and this is the right answer. If you guys don't know what was it, then you don't deserve to trade. So don't trade. Because this is the least thing to look across the board to see what currencies are performing, how they are performing against the dollar, to see where do you stand on your trades and what are the next steps to do. What's the second weakest currency across the dollar? 6.8%. And it was the Swiss franc. And then we go 2.17 Canadian dollar, 1.91, it's the New Zealand dollar, 1.05, it was the Australian dollar. The euro is almost at even, 0.62, and the pound was the only winning amongst majors. Yeah, let's go. You're long pound? So for 0.69% for the pound and gains against the dollar. So this is the top performers, how they perform since the beginning of the year. What do you think would be the strongest currency by the end of this year? What would be the strongest currency? Euro. Why would that? Expectations. Other than euro, do you agree that the euro would be the winning across all majors by the end of the year? So actually we don't know and no one knows. And even if you go for these big banks that they tell you, oh, the euro is targeting 115, etc., everything could change. We live in a market where anything can be affecting at any moment, so things can change. Yes, we have preferred scenarios and alternative scenarios, but at the time, they are all related and dependent to data. We've seen this week the CPI data, they were better in the comfort zone, so the dollar weakened, everything else moved in a proper way. So if we see any surprise figures later on, this could shift again. So that's why you need to keep an eye on data. Gold. Who trades gold? Oh, everyone trades gold. So you trade gold, or you hold gold for long term, or you speculate on gold. Who's short? Who's short on gold? Come on, guys. Come on, guys. It's fine if you lose money. Who's short on gold? But if you lose money and you don't know why, that's the problem. Who's short on gold? No one is short. Everyone is long. Everyone is making money. Then I shouldn't be here. It's fine. You are all millionaires and you know what you're doing. So for gold, we've seen a tremendous rally this year. We're up almost 18%, 16 to 18%. When we go to assess our trades or our fundamentals on a broader picture, we have high interest rate medium, yes, but gold is still performing well. What's the reason? Many would say geopolitical tensions. Yes, it's part. Another part are trends that are happening, especially in Asia. We've seen a significant trend for gold buying in China, whether it was People Bank of China or even consumers. I'm a Chinese guy. I used to trade. I used to invest in Chinese stocks, or I choose to invest in real estate. They both dropped, and I lost a bit of faith in that. So what I do, I pick some money, put it in gold. And this caused the premium on gold prices in China. Same happens in Korea. So there are building trends that help supporting this. So we are up almost 16%, 16 to 18 on gold. If you look at gold discounted at inflation, we're not at record. A lot would see that gold is trading at record, but discounted against inflation, gold is not at record yet. We are getting closer to the previous times. This is the highest weekly close on record for gold, if we just go for gold against dollar. Where gold could be going, if we see further possibility of interest rates going lower at an earlier time or at a faster pace, yes, gold could benefit. However, keep in mind that this is a bit overstretched for now. A lot of people would say we're buying gold because we're hedging against debt in the US. But still, if you look at debt in the 1970s, you look at gold prices, it's almost also moving at the same pace. But for gold, it can't just go up, similarly to what the US debt goes. It goes only up. So by that, there is a market normal where it's usual to have some sort of fluctuations. I'm sorry, but time is running so fast. This presentation should have taken around 25 minutes to be rich, but the guys asked for 15 minutes. So I'm super sorry for that. So for gold, my preferred scenario is to just have a failure swing on that and then go short. But technically, there is no signs of reversion yet. There are no signs. When we go fundamentally, if political tensions ease, then we could have a different setup than that. This is gold against silver. We've seen silver rallying to $31. The highest price silver reached in 2011 was $49.45. I was still new to trading back then. Until then, gold is at 2,430. Previous peak was at 1,900. Now silver is at 31. Previous peak was at 49. We have improvement in production and all that, but also keep in mind that the recycling on silver is something that's pushing the prices a little bit lower. So this is gold against silver. So each ounce of gold now buys you 76.65 ounces of silver. This week, we've seen a significant drop because silver prices rallied more than gold prices. It's fine for this to fluctuate. I bought you the level since 2006 till now. In 2011, 1 ounce of gold reached a ratio of 32 ounces of silver. And then in 2020, we reached up to 130. So for now, we're in a very normal and very unbiased situation. Oil, we've seen oil, sorry, this is, okay. So I missed something for oil, but oil prices, they were up well this year towards 90, almost close to $90. Now we're back to almost $80. It's very important to keep an eye on oil prices because they are drivers for inflation. So if oil prices move lower, we have lower interest rates expectations. If oil prices move higher, so interest rates could remain higher for longer. You need to keep an eye on OPEC plus what they do in terms of production. You need to keep an eye on US production levels, on non-OPEC producers. This is very important to have a bit of insight on where gold could be going. US stock indices, they were the talk of the town this year. Better performer, S&P 500, NASDAQ, and then the Dow Jones. Stocks are performing superbly well despite high interest rate medium. Markets are always forward-looking. So investors are looking that the Fed will ease, and when the Fed eases policy, so this is good for stocks. So I position myself ahead of time, and this is very good. Also on profit margins, companies in the US are doing well. So all this mixture supports a healthy uptrend. Yes, we could see corrections, but fundamentally on the broader pictures, we don't see much risks unless we see something coming out from commercial real estate, which is a big thing, and other things that could come when election comes in and the trade tensions between China and the United States. Who could tell what was the best sector performing year to date till now? So these are different sectors, XLK, XLF, so these are funds for different sectors. Who could say which was the best performing sector till now? Up 14%. What sector outperformed others? Semiconductor. This is it's technology, so XLK is technology. XLF is banking, so XLK is up 14%, XLF 13%. XLU for utilities, which is usually defensive, and it's still performing well. We're up 12%. And then we go to XLE, which is energy, up 10%. And then staples, 8%. Healthcare, 5%. And the lowest is discretionary because of when we reach a time where we could be afraid of recessions, etc. So discretionary, they perform the lowest. And safest, they perform better. Among them, the utilities. But still, the tech sector remains solid at that time, despite overstretched valuations that we can see. One of my best picks would be cybersecurity going forward because of the most things that we see in the tech space. I'm sorry I had to go fast and didn't have much time for that, but I will be available at booth number 1 at Exness. If you have any questions, please meet me there. Sorry again for trying to make this short, but because we ran out of time. Thank you all for being here. Just one thing before closing. Make sure to always know what you are investing in. Make sure to not risk money that you can't afford. Make sure to go away from scammers, bullshitters that they come and sell you. You can make million, you can take whatever, you can drive your $100 to $100,000. So please, 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 I've been trading for 14 years. I lived the dream before you. I was thinking, yes, trading is all about Lambos, yachts, all that. But reality that to be consistent in trading, you need to do the hard job. You need to really understand how markets work in order to really perform better than others. It's not an easy road. It's not also something that's not doable. So make sure to always just be informed well and stay safe and trade safe. And thank you so much for your appearance. Thank you.